In the world of finance and accounting, two key professional roles often arise: certified public accountant, CPA, and accountant. While both professions focus on managing financial records, their responsibilities, qualifications, and skill sets differ significantly. Understanding the distinctions between a CPA and an accountant is important for business owners, individuals, and anyone looking to pursue a career in accounting. The title, CPA, denotes a specific credential with added responsibilities and opportunities, while an accountant typically performs the fundamental work of managing financial transactions, ledgers, and reports. This video explores the top 10 key differences between a CPA and an accountant in the U.S. 1. Professional qualifications. One of the most fundamental differences between a CPA and an accountant is their level of professional qualification. A CPA is a licensed professional who has passed the rigorous uniform CPA examination, met specific state requirements, and completed ongoing education to maintain their license. On the other hand, an accountant does not require any formal certification to perform their duties, although they may hold a degree in accounting or finance. 2. Licensure and regulation. CPAs are licensed by the state in which they practice, and each state has its own set of requirements for obtaining a CPA license, which typically includes work experience under the supervision of another CPA. They are regulated by the state's Board of Accountancy, and their license needs to be renewed periodically. Accountants, however, are not required to have a license to practice in most states, though some may choose to pursue certifications such as the Certified Management Accountant, CMA, or Certified Internal Auditor, CIA. 3. Scope of work. CPAs are qualified to perform a wide range of accounting services that are beyond the scope of what an accountant can offer. For instance, CPAs can represent clients in front of the Internal Revenue Service, IRS, during an audit, file complex tax returns, and provide auditing and attestation services for public companies. Accountants, in contrast, focus primarily on day-to-day financial tasks such as bookkeeping, preparing basic financial reports, and managing payroll. 4. Tax services. One of the most important areas where CPAs and accountants differ is in tax services. CPAs are experts in tax law and can provide comprehensive tax planning, prepare tax returns for individuals and businesses, and offer strategies to minimize tax liabilities. They are also authorized to provide advice on complicated tax issues. Accountants, while they may assist with tax preparation, are generally not qualified to provide in-depth tax planning or represent clients in tax matters before the IRS. 5. Auditing and assurance. CPAs have the ability to conduct audits, an essential service for many businesses. They examine financial statements and records to ensure accuracy and compliance with GAAP, generally accepted accounting principles. Accountants, however, do not typically have the authority to perform audits or offer audit services. Auditing requires specialized knowledge and training, which CPAs are specifically licensed to provide. 6. Career opportunities. The career opportunities for CPAs are typically broader and more diverse than those available to accountants. CPAs can pursue roles in public accounting firms, corporate finance departments, government agencies, and as independent consultants. They can also specialize in areas such as forensic accounting, tax planning, and financial analysis. Accountants, while they have similar opportunities, may be more limited to roles such as bookkeeper, payroll manager, or financial analyst in private companies, unless they pursue further certifications. 7. Continuing education and professional development. CPAs are required to complete continuing professional education, CPE, courses to maintain their license. This ensures they stay updated on the latest changes in tax laws, accounting standards, and business practices. Accountants, on the other hand, are not subject to mandatory continuing education, although many choose to pursue certifications or further education to enhance their skills and advance in their careers. 8. Level of responsibility. Due to their advanced qualifications and licensure, CPAs generally hold more significant responsibility in financial matters than accountants. CPAs are often entrusted with preparing high-level financial statements, managing audits, providing business advisory services, and ensuring compliance with complex regulations. Accountants are typically responsible for preparing day-to-day financial records, handling payroll, and ensuring that transactions are accurately recorded. 9. Cost of services. Because CPAs are licensed professionals with advanced credentials and expertise, their services tend to be more expensive than those of an accountant. Clients often hire CPAs for more complex accounting tasks, such as audits, tax strategies, or financial advice, which justifies the higher cost. Accountants, while still skilled professionals, typically charge lower rates due to the more routine nature of their work, such as bookkeeping and basic tax preparation. 10. Ethical standards and oversight. CPAs are held to a higher standard of ethical conduct than accountants. As licensed professionals, CPAs are required to follow the AICPA, American Institute of Certified Public Accountants, Code of Professional Conduct and adhere to strict ethical guidelines in their work. They are also subject to oversight by state regulatory boards. Accountants, although expected to adhere to ethical standards, do not face the same level of regulatory scrutiny and are not bound by the same set of formal professional conduct rules as CPAs. While both CPAs and accountants play crucial roles in managing financial affairs, the differences between the two are significant. CPAs have advanced qualifications, licensure, and a broader scope of responsibilities, particularly when it comes to tax services, auditing, and offering expert advice. Accountants, on the other hand, focus on the day-to-day management of financial records and may not be equipped to handle the complex tasks that CPAs are qualified to perform. For small business owners, understanding these differences is essential in making informed decisions about which professional to hire for specific financial tasks. Ultimately, the choice between a CPA and an accountant depends on the complexity of the business's financial needs and the type of services required.